When Barron's makes a stock recommendation, we often try to find opportunities where no one is looking. Sometimes there are great stocks hiding in plain sight. Take a look at General Motors, for instance. The automaker behind brands such as Chevrolet, Cadillac, Buick, and GMC may not garner as many headlines or as steep a valuation as rival Tesla, but its sales volume consistently puts it among the top automakers in the world.
Designed and engineered for the spell of the open road.
Despite that, GM trades at less than a tenth of Tesla's market cap. And with the stock trading at roughly 8 times projected earnings, it's looking cheap, according to my colleague, Andrew Barry.
GM and other conventional car makers are trading cheaply because people feel that Tesla will be the big winner in the coming development of EVs. And GM right now, its market value is around $90 billion, which is 1/10 that of Tesla, despite higher profits than Tesla is earning right now. But people are looking to the future and seeing the future with EVs and seeing that the conventional car makers are going to have to make a tricky transition to that new era.
GM Chief Executive Mary Barra plans to double the company's annual revenue to $300 billion by 2030. It will still sell cars with internal combustion engines, but those numbers will gradually decrease. Meanwhile, GM expects that electric vehicle sales will climb to $90 billion annually, up from a projected $10 billion in 2023. At an investor presentation in October, GM projected that revenue in software and other services will hit $80 billion in 2030. Those businesses accounted for $2 billion in sales last year. But does that mean we can expect GM to become more of a rival to Tesla when it comes to EVs?
It has the tools of the space age: electronics, transistors, and computers.
It's a transition. It's a challenging one for GM to kind of maintain their presence in conventional cars powered by internal combustion engines as they build out their EV fleet. But they've made a big commitment and are spending a lot of money and have a significant battery technology as well.
And it's not just about GM making new EV cars. It's also planning to sell electric vehicle component sets, which could transform gas-powered cars into EVs. Yes, even the old gas-guzzling hot rod you have stored in your garage could become an electric vehicle. GM expects that the market for electrification could be $20 billion by 2030. Beyond what GM is doing on its own, it's worth noting investments it has made in other forward-looking companies. It has a controlling stake in Cruise, a self-driving car company, and it expects to get $50 billion in revenue from the investment by 2030. Then in December, GM also announced it is working with POSCO Chemical to build a North American factory to manufacture materials for battery cathodes. This means that GM won't have to rely on cathodes coming from Asia, which should ultimately lower costs while giving GM a tighter control over its supply chain. GM surely has a lot of big plans for the end of the decade, but can it get there?
Well, GM has very ambitious plans to double the revenue by 2030. They want to get there through EVs. They have also a very ambitious growth in their software business, which is OnStar and other businesses right now. Plus, they think the autonomous vehicle business could be a $10, $20, $30 billion business by then, essentially from nothing right now. I think Wall Street is skeptical about that, and that's reflected in the stock price, and I think that's part of the opportunity. If GM can only execute part of the way or do part of what it thinks it can possibly do by 2030, the stock could do very well.
Shares of GM kicked off the year trading at $61 a piece, but analysts see the stock hitting $75. We'll be along for the ride.